We need to talk Tesla here in this video because holy moly, Elon's compensation package is now approved. Tesla stock is up about 4.5% at the time of recording this video, and I think this is just the start. Here in this video, we will be going over all of your Tesla stock breaking news beyond just Elon's compensation package because there is also other news we need to cover. But I think most importantly, we will talk about what comes next for Tesla, why this is such a big deal, not just for today's price action in Tesla, but tomorrow, next week, next month, and next year. And of course, we will take a look at the option activity today by big money and retail investors in Tesla stock, as well as is there a shorting activity today? Is there more hedging? Is there just outright buying? I want to give you guys a full view of what's going on today. So first and foremost, as expected, Tesla is a volatile stock today. We've been talking about this, and if you want to get technical, it has not officially been announced from Tesla that the compensation package has been approved. But I guess technically it did. Elon Musk shared this post late last night that says both Tesla shareholder resolutions are currently passing by wide margins. And if you actually take a look at these images, this is for Elon's compensation package. I talked about this in the video late last night. We'll just blow it up so you can see. Essentially, the gray line is no votes, the blue line is yes votes, and the orange line is a guaranteed win. So it's going to pass, but it has not officially been announced from Tesla itself. And I think that's probably when we get the next round of buying activity, because you guys got to remember, algorithms control stocks these days, not buyers. So once those headlines actually hit the terminals and the news wires and Tesla actually makes a statement, that's when I think you will get an even larger rally. Because this was by far the biggest headwind for Tesla stock for many months now. We all have to acknowledge that Tesla was a $265 stock heading into 2024. Judge Kathleen McCormick shot down Elon's compensation package, and who gives a rat's ass what Tesla does now, right? That's been Wall Street's psychology, because if there's a 10-20% chance Elon could leave Tesla, who cares, right? Margins are improving, new vehicles are coming sooner, it looks like demand's picking up from interest rate buy downs, Tesla's not cutting prices anymore. The last earnings call was beautiful. Who cares if Elon could leave Tesla? And that's ultimately why this compensation package passing is important. And I should mention, it keeps Elon at Tesla for a longer period of time and opens the door for a new compensation package that can, strive for even greater milestones. This compensation package passing sets you up for good news is good news, right? We can actually start to look at the positive things Tesla is doing in a more positive light, right? Be more realistic. As long as Elon is staying, then that good news that we've reported on week after week after week will start to be actually good news. So I think this is a catalyst that will give dividends for months and years to come. This has been a bigger drag on Tesla's stock than any of us ultimately realize. Gary Black writes on X today, I've argued for weeks that Elon Musk's 2018 comp plan would pass easily at the 2024 AGM. I cannot see Delaware Chancery Court Judge McCormick trying a second time to overturn the will of Tesla shareholders, who again approved by a 3-1 margin Elon's 2018 comp plan, despite significantly increased disclosure, including Judge McCormick's entire Tornado versus Musk decision included in the 2024 proxy statement. The overwhelmingly favorable shareholder vote on Elon's comp plan should lift the cloud of uncertainty associated with a potential negative outcome that could have resulted in Elon leaving Tesla, which we never bought into. The mainstream media has a field day of scaring investors. There was a decent probability of a negative vote, despite math showing that a negative outcome was highly unlikely. Gary Black says, we expect Tesla to rebound 3 to 5% 10% over the next few days, but for caution to return as investors, focus turns to Tesla's Q2 deliveries, expected July 2nd, which could be -8 to 10% year over year. The wild card remains Tesla's robotaxi unveil on August 8th, which could be a boom or bust depending on whether Tesla promises true unsupervised FSD and accepts liability for damage or injury caused by their driverless vehicles. We remain Tesla bulls, but wouldn't get too carried away. Of course, I commented on this, and it seems like most of you guys agree with my perspective. I said, quote, Tesla was trading in the 240 to 265 area in January of 2024. Elon's comp package was rejected on January 30th. I would argue that has been by far the biggest drag in recent months on Tesla's performance. We now have, number one, more visibility into Tesla. Number two, Tesla focusing on what investors asked for, which were cheaper vehicles coming sooner. And number three, demand picking up from interest rate buydowns. This has been a bigger negative for Tesla stock than most of us realize. After all, who cares how good Tesla does if Elon could leave Tesla? I agree, don't get too optimistic, but in this market environment and with the short position as high as it is, we could easily retest the 250s to 260s over the coming weeks, in my opinion. Let me know your opinion on that down below in the comments section. Gary Black also writes on X today, Tesla Q shorts will stick to their mantra that Delaware Chancery Judge McCormick will again shoot down today's shareholder vote approving Elon's comp plan, despite it passing with the same 3-to-1 approval as last time. He says she won't. Tesla provided full disclosure in the 2024 proxy, including the actual Tornetta versus Musk decision. Tesla took her decision and followed her instructions to the letter on what needed to be disclosed this time around. Shareholders again approved Elon's comp plan by 3-to-1. She would look stupid, and this judge is not stupid. The only problem is she already looks stupid by trying to not pay a CEO for years of work. But as far as the markets are concerned, this is a done deal. Or at least today, when Tesla officially announces the passing of Elon's comp package, it will definitively be seen as this is over with. Let's now get into some of your other Tesla stock news, what's going on in the broader markets, and towards the end of this video, talk what's next for Tesla stock. So I do want to acknowledge, first things first, it is a pretty risk-off day out there in the markets today, which makes Tesla's move higher that much more impressive. 10-year treasury yields are trading down about 5 basis points today, but yeah, it's not a pretty picture out there in the markets. If you take a look at the Russell 2000, the Russell is down 1.4% today. The NASDAQ is down 0.1%. The Dow is down almost 1%, and the S&P 500 is down about 0.25%. At the same time, the VIX is up 4.4%. And you can see, even at the time of recording this video, the NASDAQ is falling pretty much straight down. You can also see the percent of stocks trading above their 50-day moving average is down about 12% today to 41% of stocks above their 50-day moving average. You're actually seeing 5.65% of all stocks out there falling under their 50-day moving average today. That's a pretty bad day. There is a mix of different things affecting markets today. Number one, you had Fed Jerome Powell yesterday that was so ambiguous, it was almost nauseating. He didn't answer anything. He didn't answer a single question, like just straight up. And he sounded a little bit more hawkish than before. The dot plot was a little bit more hawkish. And I think the markets are starting to realize, hey, we have two options here. We're either going to be higher for longer if the economy holds up, and even if we get multiple good inflation reports in a row, it's probably not going to give the Fed confidence they need to lower rates. That's one side of it. Not necessarily terrible for corporate earnings, but it's not great for a lot of sectors of the markets. On the other hand, it really sounds like the Fed is waiting for something to break before they actually cut rates. And I think if Jerome Powell was in a room with us, he would say, yeah, we have to see that unexpected weakening to start cutting rates. And at that point, that's a hard landing, right? By the time you see the weakness actually show up in the data, it is far too late. I mean, this is what a lot of people are pointing out today, and I think it really highlights what our markets are going to be faced with. From DRW today, Powell has no room to get hawkish. Unemployment rate is 0.6 off the cycle low. In the last 4 cycles, omitting the pandemic stuff, when the rate was up 0.6, momentum took over and the rate rose from that point with a fury. And I mean, take a look at this. It's pretty obvious. Once you go up 0.6, that would be like unemployment from 3.4% to 4%, which is what has now happened. That's when you start to see the momentum really take off to the upside and people start dramatically losing their jobs. So it seems like you're right at a pretty monumental moment where the weakening could really start at an aggressive pace. And I don't think Wall Street is blind to this. And I do think ultimately it was quite discouraging that Powell was not more dovish yesterday, considering we had CPI come in better than expected. We also had PPI this morning, which is producer price index. Think about it like producer price inflation. CPI is consumer price inflation, consumer price index technically. PPI month over month on the headline came in at negative 0.2%. The expectation was positive 0.2%. And core PPI month over month came in at 0%. The expectation was 0.3%. So PPI came in really good today and stocks still traded lower. Which, if we're being honest with each other, inflation tends to follow the business cycle when inflation actually comes about. Meaning, when you get a spike or a rise in inflation, especially in the degree in which we've seen, you usually need to see economic activity slow down. That's when inflation falls. Now, we're seeing these PPI numbers that are actually coming in negative, and it's making Wall Street wonder, is the economy slowing down faster than we think? Are we just getting this inflation data as a sign of more weakness to come? I think that's a big part of why stocks are not doing well today. I mean, inflation coming down is great, but if you have inflation falling, in which PPI today and CPI yesterday are showing, and the Fed's more hawkish than they were last meeting, and it looks like the economy's weakening, it looks a lot more obvious that we could be heading for a hard landing. You did also have initial jobless claims that spiked pretty big today, coming in at 242,000. The estimate was 225,000. So that was a bigger initial jobless claims number than Wall Street was expecting. Adam Jonas has released a new Tesla note on his thoughts about the Elon Musk compensation package. He says, number one, Elon Musk can remain at Tesla now. In our opinion, in the event shareholders reject the compensation package, we would be prepared for a number of difficult strategic changes for the company, including Elon Musk potentially resigning from the CEO role. And number two, controlling the narrative. Tesla's CEO seems excited about the shareholder turnout, and reportedly early voting trend in favor of the comp package and reincorporation proposals. Again, important to acknowledge, it's not officially a done deal from Tesla, right? So coming later on today in after hours, when we get the actual results of the shareholder meeting, that's when I would expect the next leg to Tesla stock, but more on that in just a moment. It goes on to say, having Musk's stamp on the development ahead of the response from the Delaware court may be important to build momentum with shareholders and the general public in the event the comp package is further / subsequently challenged. Number three, Tesla can be included in the AI flywheel. Beyond the avoidance of potentially adverse developments in a rejection scenario, we believe the next few months can reveal a number of areas where Tesla can be highly associated with the AI theme, even beyond cars. So really saying the AI revolution may start to touch Tesla a little bit more, whereas it really hasn't so far. Let me tell you guys right now, I've talked about this over the past couple of months, but Tesla is developing real-world AI. And at some point, I would argue over the next 12 months, the attention is going to turn from the market's perspective, not to just buying GPU providers like NVIDIA and AI hardware providers that are associated with NVIDIA, but actually buying the companies that are going to deploy the best real-world use case AI. And as far as AI is concerned, besides healthcare or something like gene editing, which I'm very bullish on that longer term, I think self-driving cars is probably the biggest value add to society that we're going to see out of AI for probably our lifetime. And that's why if you are a long-term focused investor, Tesla is almost a must-own, in my personal opinion. Ford cancels the Model E dealership program and set EV pricing model. To attempt to separate EV sales from the combustion sales proved too difficult a task to accomplish. Tesla expects to increase the price of its Model 3 because of European Union import duties on electric vehicles made in China, Tesla said on its website on Thursday. Tesla has now increased the starting lease prices for Model Y trims in the US by up to 12.5%. The long-range rear-wheel drive used to be $449, now used to be $399, now $449. Long-range all-wheel drive was $429 a month, now it's $479 a month, and the performance was $509 a month, and now it is $559 a month, which Tesla raising prices in any capacity can be looked at as good news. Holmar's catalog says, okay, Elon Musk, we got you the options. Now you have to make Tesla the most valuable company on earth. Deal? Elon Musk responds, yes. Tesla will one day be the most valuable company on earth. The question is, when and how long does that take? If we take a look at sentiment over on StockTwit, surprisingly, it's bearish today at 30. Yesterday, it was bearish at 43, so even more bearish today than it was yesterday. Message volume is extremely high today at 85, the highest it has been in a very long time, and the participation ratio today is 55, which is considered high. I think a lot of bears are disappointed today that, you know, it didn't go the way that they wanted, and they're speaking out about it. If we take a look at option activity, on the other hand, you have 55 different trades from big money, totaling $17.25 million with a positive order value of 94%. So it definitely looks like there's quite a bit of let's trade this opportunity to the bullish side. You have call volume today of 65.13% expiring tomorrow, and put activity at about 35%. So very healthy numbers there. If we take a look at June 21st as well, you have volume of 65.5% calls today, 34.5% puts. So yeah, it looks like general consensus from all of Wall Street is today is a big win for Tesla. Shorts are starting to cover a little bit. You can see 441,000 shares that have been borrowed and ultimately sold short today. And you do have return shares of 1.76 million. That means potentially a net covering of 1.32 million shares today. But there's still 101 million registered shares that are sold short. And that equates to about $18 billion currently in dollars that are sold short in Tesla, and 3.64% short interest of free flow. That does not also include the market maker shorts that, you know, the market makers have had to put on because all of this hedging activity, especially as more of those hedges get sold after the shareholder meeting, then you will start to see a lot more buying pressure. And that's why I believe coming here even today in after hours in the next hour and a half or so, these shareholder meetings can take a little while. So I don't know if the results will be shared with us at the beginning or towards the end or the middle, or when that will ultimately happen. But I am expecting more buying pressure to come upon those results being put out there for the markets. And ultimately, again, I do think this sets us up for a multi-month rally. The overall dynamic has now changed for Tesla. Good news can now be seen as good news because Elon Musk is going to stay at Tesla. And ultimately, I think over the next coming months, there is no argument that I would make to suggest Tesla is going to be less than the mid 200s. Now, I guess there's an argument to be made, in all fairness, if the economy gets worse and you do see that reacceleration in unemployment, which you typically see when you go up 0.6%. Again, that chart that I showed you guys, that's kind of the bear case for Tesla at this point. It looks like 2025 minus a recession is going to be very good. Looks like margins should improve. It looks like demand is picking up. We see this in the Google Trends data. Basically, every single day I show you guys this, right? And give this a second to update. But you're seeing Google Trends data that is at 5-year highs, that has been at 5-year highs for all of Q2. and likely going to extend into Q3 and Q4, especially if rates start to fall. That's going to give Tesla a boost as well. So even in the recession bear case that could happen over the next coming months, I do think there's also a bull case for Tesla as well, as long as it's not a deep recession. And let's be honest, it is an election year, and that's typically not what government officials want, is a weakening recession during an election year. So I could sit here and make a very strong bull case for Tesla. I really can't make a bear case for Tesla at this point. I think the sentiment is already very low. I think the fundamentals are at a troughing point where they're going to start to improve, and that's what Wall Street looks for, is bettering fundamentals. It doesn't really matter what happened in prior quarters as long as things are getting better. You know, let me be cliche here, but the rear view mirror is smaller than the windshield because it's more important where you're going and less important where you have been. I guess that goes for just everything in life, self-development, what you've went through, what a company's going through. That's what really matters. And even when you take a look at Tesla on a technical basis today, you are breaking out above this downtrend. You're above your 100-day moving average today. The next stop is getting above that 200-day moving average around 209 and some change. When you get above that, that's when you're looking at some bigger upside here. But again, don't be surprised if there is some weakness in the broader markets. Stocks at all-time highs. Fed was pretty hawkish, less cuts than expected. The, inflation data is coming in weaker than expected. Could be a sign of economic activity slowing down. There is definitely a case to be a little bit more defensive here in the broader markets, but I do think Tesla's been depressed and suppressed for so long. It could lead to a pretty sharp week or two rally for Tesla, especially considering this market environment. If the momentum comes into Tesla, yeah, it could get pretty exciting quickly. So let me know what you think about all of this information down below in the comments section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.